Cushion and patience can make you rich. You wonder why most people aren't rich because they don't have any patience. If you're fighting with a stock a lot, it's probably not working. It's not ready. It's not ready right now. Don't get shaken out of a stock that's about to change your life, and think about history and what mega trends do to certain names and what you might be holding. And is that one of those potential names? Because you know your fundamentals, you have to have the technicals corroborate the fundamentals, because the fundamentals may be correct, but the market doesn't recognize them. Now you're dead money or even losing money. One of the best tips for making big money is chilling. The more I wiggle and jiggle, the more I trim off a stock that's about to change my life. If you keep doing the right things over and over, implementing with consistency, you're going to tangle up into a life changer. It's inevitable.
All right, everybody, welcome back to the Tradeline Podcast. I'm your host, Richard Moglen. This is brought to you by DeepView, as well as the Ultimate Trading Guide. You can pick up your copy of that excellent resource down below. Today, joining us again is someone who I always love talking to, Jim Roppel, the founder of the Roppel Report. He's a hedge fund manager, crypto fund manager, and is just an extremely experienced investor and trader who inspires everybody once they, hear a single interview, and you'll be wanting to buy everything tomorrow. So this is going to be a great conversation. We're going to touch a lot of things, the AI theme, semiconductors, gold, crypto, and then take it down to, a more focused level, how Jim, first researches a company, gets interested, builds positions, and ultimately sells. So Jim, first of all, thanks so much for being here. And really looking forward to this.
Dude, always love hanging out with you, man. Fires me up every time.
Fires me up too. So let's get right into it. So, talking a very high level, what are some of the biggest themes in the market right now that you're actively focused on, researching, learning more about, and, putting money to work, to take advantage of them?
I think the two big mega trends are clearly obesity drugs, and something that's like, I think 5, 10, 20 times larger is AI. And I don't think these are just something that I'm focusing on. I think these are more so AI. In my 40 years of investing, I think it is a multiple bigger than anything I've ever seen. Now, again, when I first started out, I didn't understand what I was looking at. Okay, so some things might have been big, but I didn't quite get it. But I don't think the build out of cellular was there. Genetic engineering early with Amgen was a mega trend, but it is dwarfed by what we're seeing right now. And specifically, there's a lot of big news today.
Yeah, and we're going to get into that. And from your perspective, having done this for decades, where do you think we currently are in terms of, if you had to compare it to a ball game in terms of innings? Where are we? Are we out of the first inning yet? Have we had some outs? Well, what's kind of been the key phases that you've seen so far?
Well, if you compare it, I just did a big presentation on the comparison between the build out of the internet and the build out of AI. So right now we have energy stocks ripping. So really what we're doing here is we're trying to understand just how to fuel this, how to power it. Okay, we're not even done building out these models and training. The implications for what it could be used for are completely unknown. So I would say, the batter's clearly out of the dugout. He's probably somewhere between the on-deck circle and heading up to home plate for the first pitch. The odds are, it's so early, it's hard to really understand. If it took, from the IPO of AOL or Netscape to today, that's a 30-year build out in the internet. Right. So let's assume that technology advancement, acceleration, adoption is accelerated. Let's just say this is 50% faster. We're looking at a 15-year mega trend. So is it first inning, first pitch? It's really early, super early.
Yeah, and there's obviously already been amazing opportunities. The semiconductors last year and this year especially, of course, everybody knows NVIDIA already. But is that an area where you're still focused on, or now you mentioned the energy names, are you looking, more at the build out of the infrastructure side of things now, while the semiconductors may be based a little bit? We've had some movement in the past few days for sure. They're at, but they've been a few stages deep into their trends now. So interested to hear kind of your perspective on that.
I believe a large amount of the wealth created in the internet, certainly in the first years, were largely semiconductors. I have read from very knowledgeable analysts that I believe in that 50% of this whole AI opportunity will be AI captured by AI. And if you look at the possibilities, I think FANG is 19.9 trillion market cap. That's
Hmm.
just, seven stocks. Think about all of the ones that came and went. I mean, we're looking at the wealth creation, assuming AI fulfills the promise, multiples of that. Uh, I just want my one little piece.
We just
So
need to
yeah,
catch a few.
semiconductors, and I missed the energy names right off because I'm old school. I used to sling, utilities to, people who couldn't lose money that wanted that dividend income. Now these utilities are acting like growth stocks because they are. And there's the answer. My answer.
Yeah, perfect. So talk me through the energy theme that's really developed and really taken hold the past few weeks. What have you been noticed, and what are some of the names that you've been focused on?
Well, the force and power that CEG came out with, and then VST, um, NRG was my pick because it was basing really nice. It was in a very nice constructive base, but the 3 Mile Island deal just blew CEG through the roof and dusted NRG. It's the laggard. Um, that's right now, and I'm not in those yet. I think there's a long road to go, but the nuclear solution is a 5, 10 year down the road situation. I think in the interim, natural gas is largely going to power the. I don't see. Look, you can't regulation and red tape or government red tape is going to take forever to build these nuclear power plants. We're heading there. But how about Amazon's news? They allocated 500 million to. Is that right?
I think so. Yeah,
Everyone's searching for energy.
yeah. And CEG, if you look at the chart right here, and maybe we'll bring something up in post here. That massive gap on the news catalyst. What does that tell you about the institutions and larger parties, looking and changing their perspective on a stock and needing to accumulate stock?
It was a sea change. I'm glad you brought me back because I was going to bring that up. But it's the same thing with China. It was that same overwhelming force and power. The market it was a tidal wave, a tectonic change where, if I was on my A game, I would have just bought regardless of what I knew. And, I kind of used to do a lot more of that, but I am so heavily long. I really don't, unless I'm going to go farther out on margin, which I really don't want to do, I have to sell something to buy something.
Hmm.
So I think energy is an area where I might consider doing that. I did plan on expanding China up to about 30% of my account, but it actually failed. And, I'm off segueing. The monster news is the advancement of Trump's futures numbers. And as that's occurred, I think China's government did not fulfill the promise. And so they were already breaking down. But as Trump's advanced, remember, he's a protectionist and he blasted the market multiple times with protectionist rhetoric. And I suspect that the market is acting very much like it was as Trump uh, was recognized as in charge or elected. So the large part of the China breakdown, I think the second leg down is because of Trump, partially. That's an assumption. I don't know. But the power they both exploded out with is rare, unique, and must be, at the very least, monitored, and it should be actionable for the quick. It should have been actionable.
And those big moves like that on volume and gap ups, especially many days in a row, is that how the market and what you look for to determine, where the money's flowing, new developments where you should be focused, listening to that market action really intimately and then looking for the story behind it and seeing if there's more there than just something that could fuel a few days, looking for something that can fuel weeks and months.
That type of action is so rare. And I think the combination of incredibly depressed valuations in China names through because of distrust and all the
Yep.
negatives, it was uncoiling. It was also like a short squeeze. That type of robust action is so rare. In my life, I've only seen it a few times. And if I was, say, coming out of a bear market and I was all in cash, I would have just bought indiscriminately. I would not have looked. I would not have waited to understand the story. I would have just gone straight in on price action. But I'm so heavily allocated, I really have to think carefully about, well, am I going to dislodge a stock I'm up 50 or 100% in with a giant cushion and tax seasoning to get me to the long-term gain 1 year mark
Right.
to take on a brand new name and then live on the razor's edge of, 357? That's a giant decision. And I'm already long a lot of the names I want to be long. So we're in a different moment here. We're in the bull market is given us some time to really get big in the right names. So new names have to be considered very carefully.
Yeah, and you mentioned 357. That's a little hint to what we'll discuss later on risk management. That's Jim's basically stop loss levels, how he exits a new position if it moves against him. But stay tuned for that if you're interested on that. Bringing it back to AI and themes, and specifically semiconductors. NVIDIA, of course, everybody knows NVIDIA now. It's in, I don't know if you exactly the count of the stage, whether fourth or third, depending on how you count. But I assume you have a position. I don't know for sure, but what do you think the potential is for that name? Are you looking elsewhere into semiconductors as a potential rotation play out of kind of the name that everybody knows? What's kind of your thoughts around semiconductors at this moment in later 2024?
So I've had a position in my hedge funds and personally for quite a long time. NVIDIA is well known in a lot of the values been realized, but I do believe that Blackwell is going to be bigger than anything they've ever had. I have a very big position. I've held it for a long time, and it's easy. If I'm going to go down the food chain into some super volatile semi that's going to rock all over the world, I mean, think about it. I can just sit with a monster cushion and let it do its thing. It's not ready right now. It's at the 140 mark and it just won't go right now.
Yeah.
It kind of came up on low volume and the base it had built was very wide, like a 33% high to low. It has been tightening up, but it just wasn't ready to go. Normally the TSM type news, if it was tight, it would have just, I think, taken off. It needs more time. The volume's running really pretty high today on NVIDIA.
Hmm.
I just think it needs a little more time. And it is by far probably, the magic elixir is crazy high earnings growth with crazy high average daily dollar volume. In my report that's coming out this Sunday, I have a special graphic which is going to illustrate how uniquely rare NVIDIA is in that magic elixir ratio. From my research, there's never been a stock in history even remotely like it. Never have we seen the type of average daily dollar volume with 1 to 400% quarterly growth. It's just never happened. And it's not even close. The second best. So
Yeah, I've got the 20-day average dollar volume at 28 billion. Insane. Absolutely
and
insane.
last quarter they did 30 billion in revenues on what 100% earnings growth?
One 151,
Yeah.
151%. Yeah.
So if you're Janus 20, you have to be in that name. There's nowhere else a monster can go to get that type of liquidity and high earnings growth. It's a singularly must own. And you'll notice like at quarter ends, it rallies that day. When good news comes out, people don't know what to buy. They don't buy the futures, they'll buy NVIDIA. Like it just has in a loose space, it has buoyancy at key moments. It's still a darling. It's absolutely the institutional darling. We've never seen a stock like it in history.
I did want to bring up Tesla, which is kind of, it was the institutional darling of the 2020 and 2021. They've had a lot of news catalysts. Price action has been lackluster, to say the least, the past few years. Has the new news and developments changed your mind fundamentally about the picture? Maybe not price action wise just yet. We've got earnings coming up in a few days, but any thoughts on Tesla, the new things that they're bringing out? Because I know you've been on this, Eve's been on it early, way early. But yeah, any updates there with how you view Tesla and its prospects?
So the stock is not fulfilling the fundamentals. They're not corroborating each other. Now, I'm wildly bullish. I love Elon Musk. I think he's good for the world, good for the poor, good for innovation. But the stock is dead to me until it's over 272. Over 272, that RS could go straight up. IRS is like in the 20s or something. Is that correct?
I believe so, yeah.
Um, and it has significant overhead, but there is a well-defined pivot up at 272 with one of the best fundamental stories in the whole market. It's like A-Lab. A-Lab, if you read about it and what possibly they may do is, but the stock is only just now starting to engage. And, Bill would say you have to have a prior uptrend. And that thing was in a wicked downtrend. So you have to have the technicals corroborate the fundamentals because the fundamentals may be correct, but the market doesn't recognize them now. You're dead money or even losing money. So and here's the thing. Tesla is another crazy liquid name. So the institutions you can go buy 100,000 and it doesn't move. I mean, you need to buy millions of shares to move it.
Yeah, and you mentioned A-Lab, and actually that was a name I wanted to bring up here. And that's kind of another play on kind of the AI infrastructure. And from what I know of it, they develop special switches that allow you to extend the wiring within data centers. But from your perspective, I assume you've done more research on it. What's so special about that name that you're really interested in the story? And then, yeah, the stock's definitely woken up, started to push off the bottom over the past few weeks or so. But yeah, talk to me about A-Lab, what you like about it.
Look at the sales growth.
Hmm.
It is 100% or better. Okay, earnings are going from losses to gains, and it reminds me a lot of Net. Okay, now Net has been digesting for 2 years,
Yeah.
but those sales and earnings have not decelerated like they did at Tesla. So, here's what I don't like. I'm not an engineer. I'm not an electrical engineer. I don't split atoms. I don't split genes. So some of these fundamental stories are over my head. So I get like a cursory fundamental understanding. And if all the metrics are in gear and the price goes, I'm going to get long them. But what I love about Lilly is it's just so basically easy to understand. It's like Kava. I can walk in and I'm like, wow, there's a line out the door. I love the food. There's 350 locations. They're going to have at least 1,000. And I know the management has rocked it out in two other prior, Alban Pan and then Panera. So the CEO, the chairman of the board is, they've got this down. They're easy to understand. It's kind of like the Peter Lynch thing. If you use the product, now I have two friends who lost over 100 pounds on Ozempic.
Wow.
So you asked me about A-Lab. We could do 2 hours on the fundamentals, but there's just not enough time.
Yeah. No worries. And let's transition now to that other theme that you're talking about with LLY. Is that the main player in your mind, or are you watching any of these side names like NVO or HIMS as well? Yeah.
Okay,
BKTX.
HIMS is just such an iffy, regulations uncertain, and I had toyed around with it a little bit, but I just couldn't build a big position. I blew it all out, but
It's whippy.
it's it's a tiny little, it's hard for people who are running $1 million account or a $300,000, $100,000 account to understand liquidity. It just, like, it didn't even when my personal account got big, it didn't affect what I went into. Now that I'm running institutional money, liquidity is the first thing I look at on a stock. Because if it doesn't have average daily dollar volume of 200, 300, 400 million, I can't even look at it. But going back, NVO's RS has declined to 20. But Viking, again, now I'm contradicting myself. Their drug is supposed to help you lose more weight faster than either anybody else. And I think it's a oral pill. And it is starting to tighten up. Now, any drug company that doesn't have a weight loss drug, this is supposed to be a $100 billion market in 6 years, coming from below sub 10 billion. Viking is a major takeover target. Now, I think that in my whole life, in 40 years, I've had like 5 takeovers. So I don't ever just go, oh, it's definitely a takeover, because it's very unlikely. But on its own, and again, I don't like stocks that don't have full FDA approval yet. And that is about a year or two away, maybe. But the pattern's so intriguing. And if you look at XBI, it is in a very, very low bottoming cup and handle with a well-defined pivot. So I think we're ready to see an eruption in biotech, which has a very warm place in my heart. My family had been involved in it for many years. I had been involved in it, and think that that whole sector is ready to go. And, Amgen kicked it all off with the red blood cell replenisher. It only takes one.
Right.
And biotech stocks are a lot like Chinese stocks. There hasn't been a revolution. The stocks are compressed. The market is not recognizing the potential opportunity here. So if Viking starts to go, it could light the whole sector up. Or there's another drug that I don't even know about that could come out. So I'm very bullish on biotech.
Yeah. Would you be trading Viking, or would you be focused more on LLY, which is the liquid, Uber, institutional backed name in that space?
I have a big Lilly position and I've had it for a while. It holds right around that 50-day. It's
Yep.
something wrong with NVO. I don't know what it is, but if Viking were to engage, I'm locked and loaded. I know the story. I'm willing to take the added risk of the lower liquidity. And it's not illiquid. It's just not ready for, Fidelity to build a giant position in it.
Yeah, I've got the dollar volume at around 140 million, so not nothing.
And it's bite size. The market cap's what, 7 billion?
Yep.
I mean, that's like a big research budget for a drug. I mean, that thing could just get gobbled up. And the management kind of threw a curveball at the market and said, well, we're doing a bond offering or a secondary offering to build a sales force, as if they're not looking for a partner. Well, cash is on the balance sheet. Let's see what happens. It's going to be very interesting.
Yeah, and it's super tight the last few days, and
Yes.
I wanted to bring this up, just as a general concept, but since the chart kind of shows it right now, what does really tight ranges, especially on low volume, especially after stocks made a nice move, which this hasn't necessarily it's basing right now, but after stock, what does a tight area on low volume kind of show you about what's going on behind the scenes?
It just means to me that institutions are not aggressively buying it, but they're just sitting on the bid, soaking it up. If you look at ANF, Abercrombie,
Hmm.
it's in the bottom of maybe some semblance of a double bottom, or I'm sorry, a double bottom, but the last 5, 6 weeks, it closed at the dead high now that is a whale or a couple whales saying, we're taking this all in. Okay.
Right.
And every time it goes down, we're going to run it right back up, but we don't want to be super obvious. Um, that's what that looks. And Kava on a daily is doing a micro version of this.
Hmm.
And when Chipotle came out, and look at the high again, I always say, don't look at wiggles and jiggles. I'm not going to act on this, but it does instill confidence in me. But Chipotle's news rocked it down on 2 days ago, 3 days
Yeah.
ago. And I look at it as more of an endorsement of the whole Mediterranean blue zone
Right.
food area. And this is think about how many people are going to eat lunch today. Okay, there's room for multiple players here. There's Brown's Chicken and Kentucky Fried and Popeyes. Who knows? This is a big trend. But
Yeah.
Wingstop is failing.
Yeah. And like you said, well, with Kava, you've kind of got the health factor too. Like you said, it's the blue zone. It's kind of viewed as the healthy alternative. It might be, it may not, of course, but it's got kind of that it factor going for it. I have a position, by the way, just for everybody's reference. But getting back to the tight area, like you said, it's a characteristic that you're looking for. It's not necessarily something you act on, but it gives you confidence that someone's on that bid and somebody's supporting it somewhat.
So if you get that kind of tight action, 2, 3 weeks just below the 50-day, I was rereading my bill notes a couple weeks ago, and they flat out said tight action just below the 50 makes a stock actionable when it regains, either to build or start a position. And Lilly's getting in that zone.
And what's the difference there, which is a positive sign, versus living below the 50-day, which obviously is a little bit of a warning sign? What's the difference there in terms of how you're viewing the price action?
So there's multiple issues. If a stock's been dormant for a long time and it goes below the 50 by 3, 4, 5%, if it's like 9% off the highs, I'm not going to flip. But if the stock's 15, 20% off the high and then gets 5% below the 50, I'm likely to just either hedge it, dump it, But if I think the total addressable market is amazing, I might just go max long do delta neutral and wait it out to give it a moment. If a stock's going to go from 50 to 300, it's going to go 6x. It's going to go dormant
Hmm.
many times. And I don't like paying 40, 50% taxes. So I want to I give stocks every opportunity to succeed. I do not suffocate great opportunities. It's kind of like if you play golf, if you putt and you leave it short, it cannot go in. The average TML, I think it's like 94 or 96 weeks of, beat and raise quarters. Most people hold stock for 11 days. How can you possibly expect to double or triple in a name if you don't let it breathe? I don't drink my great wine 20 minutes after I buy it. I let it sit for 5, 6, 7, 10 or more years. Patience, cushion, and patience can make you rich. And you wonder why most people aren't rich because they don't have any patience.
I love that. And if you had to distill your top tips for being able to sit with a potential leader that could go that distance, what are some things that you think about? What would be your advice for somebody who asks you, how do I learn to sit better? How do I learn to stick with a leader that I've got a cushion in?
You have to, number one, you have to know the fundamentals cold and you have to believe in them. And then you have to have a position size that agrees with your temperament. In other words, if it's greatly extended over the 50-day, well, I know that almost every stock's going to come down to or below the 50-day 4 to 5 times a year. So if your position's too big where you can't take a drawdown like that, you're definitely going to get shaken out. So your position size has got to be right for you.
Hmm.
Some people that's, you know, 5% of your account. And back for me when I was a kid, I'd put 50% of my whole account in 4 stocks on margin. That's cowboy action. And when you asked me, I think might have made more money with a lot less hand wringing if I would have taken it a little slower when I was building the war chest. I would really advise not to cowboy up to the levels that some people do. Um, Quality of life is really important. It's not just you'll get there. You just don't have to run full out, on 5 Celsiuses all the way.
Yeah, and speaking of extensions above the 50-day, I know that's something you look for to potentially start hedging. What's kind of your process with that? When do you start looking, all right, maybe I'll buy some protection because I want to be able to sit with this. What are your thoughts there? What's kind of your strategy with that?
So I know, I'm really trying to sit for 4 to 6 beat and raise quarters. And I know, I mean, think about this. The average market in a course of a year is going to need 4.1 follow through days to reaffirm the uptrend every year. So if I know that, and I know the average stock comes down to the 50-day 4 to 5, and I'm talking about elite leaders, not just anything.
Right.
I know that's going to happen. So when a stock gets historically extended or the general market does, I'm going to hedge off 40 to 60% of that whole position. I'm not trying to make money. I'm trying to dampen the pullback. Like I'm short APP calls right now. All right.
Yep.
Because it's 41 or the 50's coming up. So it's around 39, 40% extended. I'm short some calls, but the thing is going dead tight. So I'm likely to end up having to buy these calls. The calls are um, time and volatility premiums come in a bit, but I often buy my calls back at a loss, and I'm fine with that. I'm just trying to get to the finish line without too much. I'm 60, okay? I'm not, I don't want to deal with that volatility I used to. So when a stock gets extended by a historical measure post breakout, I'm going to hedge off 40. Now, again, I don't want to sell calls against my whole position in case it gets into a climax run or maybe that rare once every 5 years takeover. Not
Right.
impossible.
And how do you decide the strike price you buy, the duration out? How do you kind of think about that?
Well, I want max burn in time and volatility decay. So I want to be 5 to 10 days out max. I also look at the spread bid ask. The deeper in the money you go, the bigger that spread gets. So if the 50 days like way down, like 30, 40%, I'll just sell some calls down 5 or 8 or 10%. And then if the stock gets below that strike, I'll just roll them down. But again, the 21 day, we are in a goofy bull market. It's so crazy strong that the 21 day is relevant. Like on
Right.
CEG,
Yeah.
it stopped dead on the 21. This is a rare moment. Okay, we are in a for me, max long green light, golden goose, fire it up, press it hard, where the 21 days relevant. So I said, if I sell them calls deep in the money down 10, 15, 5, 10%, and we get there, I'm starting to debate, well, is that should I just cover them and see what happens? And this brings into play that it's an art. There is
Yeah.
no, you might want to say, hey, I'll cover 30% of my short calls at the 21 day. And then if it gets down to the 50, I'll cover another 20 or 30%. If it breaks the 50, I might want to add them back to see how it's acting down there. I'm not 1+1 =. I mean, it's an art. I'm feeling my way around. Is it getting accumulated? Is it tight? Is it closing at the dead high? Is the volume dried up to nothing? Or is it breaking wide? I mean, I'm measuring this and I don't trade much. I have to be forced into a buy because of an explosion in volume or forced into a sell because of a broken 50-day or something like that. I begrudgingly trade. It cures you from over trading, which is, you said, what is one of the best tips for sitting? One of the best tips for making big money is chilling. The more I wiggle and jiggle, the more I trim off a stock that's about to change my life. I tweeted about that this morning. Most people get in a name, they start trimming because it's extended or whatever, and they work their way out of these names that they're not going to go up 20%. Okay. We're in a revolution here in multiple industries that are changing our world. These stocks, if you study, here's another way, study history, look at the percentage gains in real TMLs.
Yeah.
We're talking about 100% is a bunt.
Yeah.
Okay. We're talking about 300, 500, a couple 1,000% over years. And I just see people working their way out of these names that are going to could change their lives. And again, my performance is erratic. I could go a year up or down 10% and nothing. And then all of a sudden I'll tangle up into the name in big size, and I'll earn 3 years worth of profits, right? In that one name over 18 months. So I'm not consistent. I'm erratic. And that's because I'm a long ball hitter. I'm willing to deal with that. I don't care. I could care less about a 10% profit. It's irrelevant to me. It doesn't move the needle. And when we go back to position size, I said some people can only deal with a 5% position. Well, if it doubles, it only moves your account, 5%. It's not I have to have enough size where when I do get that rare double or triple, it really helps. Otherwise, you're really predicated on mass bulk in the market and the index.
And I didn't want to cut you off, but for everybody with their bingo cards, Jim did say golden goose. So just FYI. And
only once so far.
Only one so far, which is amazing. Very impressive, Jim. But to add on to that point, I know you've said in prior interviews, but your max size that you're willing to go to, is it around 18%? Is that what you said in the past? Has it changed a little bit? Obviously, it's a little.
Okay. So I'll take it up to maybe 2023 in a raging bull market. I mean, that's like opening, like, to get going. Now, the problem is when it grows, that goes up 100%. Now you're really heavy. One of the, I bought NVIDIA a million years ago in big size. And prior to every single earnings report for about 2 years, I trimmed off a bunch of it. I had to, because if they missed, it would have been detrimental to my fund's health. Had I held on to it, I would have had the biggest trade of my life. But there's a giant difference between capturing a gain that's going to come and trying to overdo it and screwing the whole thing up because it just gets too big. So And that's something that I learned because I screwed up a lot of them. I had this neighbor and he was in charge of the Chicago Stock Exchange. And one time I told him how much stock I had in the name. And he goes, kid, he goes, I don't know how much money you have. He goes, but that sounds like a really big position for somebody your age. He goes, I'll just tell you, price will hurt you, but size will kill you. And he was right because the stock I had was Siebel Systems. I think I had 27,000 shares. This is a billion years ago. And I got stopped out and lost money on it. Siebel was one of the greatest stocks of the dot-com boom. And then I did it again with another stock called Theragenics. So only through me learning by screwing it up did I realize that it's better to take a little smaller position that you can deal. And again, I didn't hedge back then. I just rode these things, you know, and dealt with the volatility. So there's a lot of answers.
No, that's good. And it kind of brings me to the next thing I want to talk about, which is that point where you're establishing your position and you don't have a cushion yet. And this brings us to your 357 rule. Obviously, when you have a cushion, like you said, you want to sit with it, let it do its thing, work for you. But there is that time where there's that indecision. Is it going to work? Is it not going to work? And you want to protect yourself if it's just not, if just the timing isn't right. So talk me through your process for establishing a position, how that 357 helps you, how that protects you, and how you pyramid and add size so it's meaningful when it works, but you're not hurting yourself too badly if it does stop you out.
So there's different times. There's the end of a bear market or a follow through day. I'm going to cautiously enter because I'm not sure about the durability of the uptrend. And then there's a period like this right now where we're in the hottest market I've ever seen in my life. And I'll give you two examples, like Tencent. When the Chinese explosion occurred, I knew something was major was at foot, and I piled into Tencent. Now, in the Roppel report, I put the right one in there. I put FXI. Had anybody done that, they would have, but I was too smart. I had to have the liquid leader, the big liquidity and the earnings growth. It was kind of the blue chip of the bunch,
Yeah.
which turned out to be the dog of the bunch. And so I piled in, and it was so powerful. I built a pretty big position, and I did have a really good cushion in it, and then it just rolled over, then it digested, and then it broke the bottom, and I just blew it all out. I blew it all out way at like break even because I was at one point up like 25% on it. The other one that did work was when APP came out. I opened in bull markets. I want to open with 10% of equity. I mean, first trade, at least. And it came out, and the second I got the fill, it was already up like 50 cents or a dollar. So 30 minutes later, I went back in and bought another lot. And I ended up buying, and every fill trader calls me, it was higher every single time. And I just bought it like every hour all day and into the close. And I ended up with this walloping position because I was forced into it. Most people will take a position, and if it goes up immediately, they're like, oh, it's gone too far. To me, that's like, wow, something really powerful is going on here. And it's somebody who is way bigger than me. Somebody's running a billion or billions or maybe multiple people. And if you look at the walls or the skyscrapers of blue bars on the weekly, I think that is the best volume signature of any stock in the whole market right now. So I had that. It was a 99 comp name, 99 RS, and the price action, it was yelling at me. So I did the same thing with Tencent, and I ended up a push. But sometimes if you keep doing the right things over and over, implementing with consistency, you're going to tangle up into a life changer. It's impossible. If you keep buying 99 comp, 99 RS names at new highs coming out of bases, you're eventually going to tangle up into a monster. It's inevitable.
And was that the recent base that you're talking about, the breakout from
Yeah.
that really nice handle against the 21 EMA? Yeah.
It's up about 50% since then.
Yep.
And I didn't know, like I had no advanced knowledge. I just looked at the institutions leave tracks. Okay. They cannot buy in size without making those walls and skyscrapers of blue. They can't hide. That's a real valuable clue. And these monster institutions, they're buying every day for weeks and sometimes months. So one of the most valuable pieces of information you can get is seeing that Fidelity just started a position. Because if you can catch it where they just bought 10, 20, 100,000 shares in one fund and none of the other funds have it, because the analysts go from Contra to all the same analyst for that stock goes to all the different managers, and the manager says, "What's your best idea?" He's like, "Oh, it's this one." So they tend to end up all owning it,
Right.
and that takes time. I mean, they're tripping over each other to fight for those shares.
And to bring you back to my question, on the 357, if app, instead of breaking out, pushed in the morning, but then started to fail, reverse, talk me through 357, how you apply that to protect your downside.
So I don't know. I rarely stay to down 7% for my last third. I'm usually that was a long time ago when I established that. Now I'm usually out by 5, 6 out of everything. But the beauty of it is a lot of times I'll take that first position and it will never even get up another 1.5, 2%. So I won't even get the whole position on and it'll fail. That's
Yep.
ideal.
Mhm.
Now, I ideally like to spread the buys out over time. I don't want to trade in the first 30, 45 minutes. Now, on a gap up crazy moment, I will start. But then I want to stretch it out over time because reversals and the market fades initial gaps a lot. I want to try. And now, again, sometimes they're so strong like APP, you have to take the risk. So ideally, I would like to buy a position and it just goes up all day and then it goes dead tight for 2, 3, 4, 5 days. And then it comes out and then I'm
Yeah.
going to double it up. Again, you want to spread the buys over price and time if possible, but the market doesn't always give you what you want. When you catch a real monster, you have to dispel, you have to bend the rule. And I don't bet when I bending rules is kind of like a sleepover on a school night a couple times a year. I'm going to bend a rule. Most rules are, I'm very firm on rules. Um, Experience has taught me that sometimes you have to bend them, but then you just have to be more vigilant with risk management if you're bending rules. And if you're bending rules all the time, you have no rules.
Yep. And sorry to bring you back to this, but the 357, just to spell it out for people who haven't watched prior things, those are your stop loss levels. How do you use that to make sure that you exit if it does turn around instead of, keeping it going?
You buy 10,000 shares, it goes down 3%, you dump 3,300. Down 5, dump 3,300. And if by the time you're down 7, you're probably really wrong. You did blow it all out and you're out. So your average loss on it should be, half of 1% of equity. It just keeps you in the game.
Yeah.
It's most managers, brokers when I was a retail broker 40 years ago, almost 100% of all of them are out of the market. They just blew up. Started my hedge fund. About 5 other people started around when I did. They're all out. My risk management has kept me in the game. I am not better. I don't pick stocks better. I just don't. I was talking to my daughter. I'm staying with her right now. And I said, I want to calm down my life and I don't want to worry. And I'm like, I don't know why I worry about markets because I have such good risk management that if I just keep employing it, I'm going to be just fine. Knowing your position size, 357 above the 50-day, it just, as long as your position sizes aren't life threatening, you're going to take a lot of losses. And here, I had to kind of apologize to my subscribers because I was really bullish on China and it failed. I'm like, are we in such a crazy bull market that like if something doesn't work that I have to apologize? Normally I'm wrong 7 out of 10 buys, 70% fail. And now it's so red hot that everything's working. That's how crazy bullish this is. This is a rare, rare moment in market history.
And just because it does stop you out once doesn't mean that the stock is necessarily wrong. It could just be the timing of it. It could just need to reset, and then you'll give it another shot. Just to clarify for people watching.
100%, I
Yep.
will, if it resets or re-engages, that would be an expectation breaker. And I might come right back in on a upside reversal. I did this with Apple 20 years ago, early on in the iPod, iPhone revolution. I got stopped out in after hours and I had a big talk with Bill, went to confession, and he said, you had to buy this thing back on the retake of the 50-day plus 15%. I will, again, if you're fighting with a stock a lot, it's probably not working. It's not ready. It's not ready right now. The winners that I've had, the biggest winners, I didn't fight with them. Again, I build my positions, especially around a 50-day. Those are messy affairs. It's rare when a regain of a 50 just goes straight up. Usually it slops around above and below, and you might buy a block of stock, and then if it gets messy, you trim off a little bit and work with it. Again, there's many different ways to implement CanSlim. It's kind of how you make it, adjust it to suit your personality.
And that the reclaiming the 50-day plus 15%, that's referring to the number of shares, right? You buy 15% more, right? Just to clarify, it's not 50% above the 50-day. You want to buy more shares than your original position.
Because the stock is showing you power.
Yeah, exactly. And you mentioned O'Neill. What would be his approach for cutting losses? What would be his, your typical stop loss hit if you're aware of this? Because I know the book, which obviously is excellent, mentions 7 to 8%, but I've heard some people say that's the special circumstance, perfect first stage base, perfect everything, and in reality he'd want to be cutting it much sooner than that 7 to 8%. What if you have a perspective on that? That'd be great.
Bill was a lot more. I think okay, that book is written for the public, and I think Bill had rules for himself and rules for the public, and he was. This was his full-time commitment. I think most people reading that book are lawyers or mailmen, or they're not traders. Bill was really active, and he was always testing the market. Even, with someone of Bill's wealth, was in bad markets, would test with 100 lots. And then when it would get better, he would. So anyway, I think Bill was cutting immediately sometimes. And I think he would walk away from a position completely, and then it would gather strength a week or a month later or a year later and come back. Bill was a very active. Bill's trader was my trader. The guy who filled his orders filled mine. So I kind of had a more color on what he was doing sometimes. He was very active. And no, I don't think Bill waited for 7%.
Yeah. And I've heard people say, he would just add tiny amounts on good days, right, over the course of the trend, and just continue to kind of build that position as it worked for him, which obviously, over a leader that goes up 700, 800%, that can make a huge difference. Just keep adding very small as it goes up in your favor.
Well, look at some of the marked up charts. He puts add here, don't sell below the 50 because it's not breaking back. I mean, he was working around positions all the time. And I mean, even as little as 500 shares, he would have a couple 100,000 on or maybe more, and he'd add or subtract 1,000 shares. Like, he's just moving with the flow. And I tend to sell extremes or trim and hedge extremes only. I don't really monkey around. I'm more of a position builder and sitter. And that's my strong suit, but it's detrimental to me when things don't work. I will, my strong suit is my weakness at the same time.
Perfect. There was another big theme that I wanted to talk to you about, which we haven't touched on much yet. Obviously, you run a crypto hedge fund. First, from a very high level, what's the landscape like with those markets? And then I want to bring it down to Bitcoin, individual names, MSTR. But first, from a high level, Bitcoin's been basing for months and months and months. Feels like years at this point. What's kind of your thought on the higher level view of everything that's going on in the crypto space?
Here's the high level view. It's about to blow the lid off. We are in a monster multi-year cup and handle. The market is completely tranquil and quiescent. It's dead. Over 74,000 on Bitcoin. You're breaking out of a cup and handle. There's 3 legs down in the handle. It's a bunt. It's a chip shot to 100 grand. Large Livermore buy point pivots at $100,000 will be broadcast to every media outlet in the world. It'll be the largest Livermore pivot ever in history. And that is going to drive the public goofy. And I just think I am so bullish on Bitcoin. If you Google search for how many people are searching for Bitcoin or crypto, it's totally in a valley. It's gone dormant. The average daily range is collapsed. Trump is super pro crypto. He's now leading. I can't believe the spread in the futures on Trump Kamala. I'm shocked. And that is pushing it. Um, I am really bullish. The halvening cycle has not started yet. It is real. It is not irrelevant anymore. And again, if it breaks down, I'm wrong, and I'll walk away. But that's not the signals I'm getting. I mean, look at the stable coin usage. Look at the. And I'm really good friends with probably the largest crypto hedge fund manager, bar none. And I was with him, and he pulls out his iPhone and he gets like updates every week on all the positions. They're mostly private, all private placements, and it's just hockey stick, up and up to the right. I mean, the engagement, the adoption, the usage is just it's ramping all over the place. The crypto market cap chart is in a giant cup and handle. I salivate when I see it. My heart races a little faster.
All right, perfect. That's the bullishness I wanted. From a individual name perspective, individual crypto or stock as well. If you're playing it that way, I know some people you're probably more focused on the names themselves. But are you more focused on Bitcoin in of itself? Are there other names, other coins that you're also focused on? How are you personally kind of playing what you're seeing?
So I have a huge a large percentage of my net worth is in my crypto fund. So I have a very diversified fund. I have like 25 private placements. My biggest position is probably Bitcoin, then Solana, Ether. I've been reducing my Ether position and moving into Solana. I bought a lot from the FTX bankruptcy estate. Um, I have a really well-rounded fund from exchanges to applications to scaling. It's really diversified, as diversified as you could be in crypto anyway. And they're
Yeah.
super highly correlated. And I'll tell you this, I think the best strategy for the average man out there who's not like living it, if you just stay in the top 30 market cap coins, if this coin is going to go from X to 5X, it's going to have to end up there. And I'm not talking about some piece of crap. Okay. I'm talking about real projects, not ideas or white papers. If a stock's going to become a monster, it's going to have to get into the top 30 and stay there. So if you have a coin, you buy 10 of the top 30 outside of stable coins. And if it drops out of the top 30 for say 2-3 months, dump it and move it into another one. That's what I would do. But I have a more laser focused fund.
Yeah. And then from a crypto related stock perspective, we've seen names definitely wake up in the past few weeks. Coinbase, MSTR has been trending a lot, which is more like just a leverage Bitcoin play. But on that front, are there any stocks that are related to crypto that you're interested in, or just, any thoughts on that front?
I have a difficult time with the miners. I think mining is a very, very rough business. Cores is really interesting. That's probably my best idea. You know, I'd rather just see like if you look at Coinbase on a monthly, it's
Yeah.
in a gigantic cup.
Yep.
But I'd rather see you own Solana. Solana would probably be my single. If I were to redo everything and didn't have to look at, paying a lot of capital gains, moving things around, I would start Solana and Bitcoin would be my two biggest positions. I'm, kind of like when the auto industry was evolving, there were a couple hundred auto manufacturers and it boiled down to 20. I think that it's very possible. Look, Bitcoin is very different than these projects. Okay. Of the projects and the utilities and the applications, the biggest and the best may not have ICO'd yet. It's not only entirely plausible, it's likely that we will see bigger, better ideas ICO in the years to come. So again, I can't believe you asked me what are the mega trends and I didn't fire off crypto immediately. And a lot of times you're talking and I'm thinking, oh, why didn't I say that?
No, I think it's cool that we've got AI, we've got crypto. It seems like there's a lot of trends going on right at this moment, kind of coming together that are a little bit independent. There's obviously some interrelatedness, but a lot of stuff is working. Like you said, this is a pretty strong environment as of this moment. We'll see if things crash tomorrow before we post it this weekend. But there's a lot of themes that are working and a lot of stocks just trending above their moving averages, which is awesome.
It's a renaissance in America exceptionalism. And we didn't even talk about autonomous driving, biotechnology. I mean, there's all of these uh, really life-changing projects or technologies colliding together to create what I believe is an unbelievable deflationary economic boom. Why, all these people are calling for a recession over the last 6 and 9 months, and Costco, Walmart, and American Express are banging out new highs. I'm like, what recession are you looking at? The market totally disagrees. The market kept making new highs, and everyone's screaming recession. I mean, people were panicking and talking about it ad nauseum, and now we've got the Fed put. I actually think the market is so strong. I wouldn't be shocked if the Fed has to pull the reins in, and if they don't, it's just like throwing nitroglycerin on dry tinder. More rate cuts at this minute. Now, if unemployment starts to go up, which is not what's happening, the last jobs report was extremely bullish. We could see a ripping economy and inflation come back. I think that's a real. It's not there now. Inflation's still falling, but if they I think the Fed is more likely to overcook it than suffocate it at this point. But I'll let the market tell me. My opinions are very in flux.
Yeah. And speaking of the market, we've obviously mentioned when we talked about the themes, a lot of key names, energy names, NVIDIA, semiconductors. Are there any other very key market leaders that you view at this moment that we haven't talked about? PLTR maybe comes to mind, stuff that maybe go through the list of your positions and what we haven't discussed just yet. That'd be great.
Like I feel like the outfielder who had one hit right to him and I let it go right between my legs. This guide wire is Dash. Dash is
Gotcha.
wildly superior to Uber. And I know Uber would be doing better if they didn't have the news this morning of the possible acquisition. We talked about the energy names, Lilly, Kava, XBI is in a beautiful cup and handle.
Yep.
Gold is absolutely in a bull market. It's come out of like a 20-year base. The brokers, IAI, just screaming new highs. That is so bullish foreshadowing. COHR is really rare merchandise. It's leading out in that area, extended, very small name. Semis, were tarnished by ASML. But this morning, TSM basically said non-AI weak, AI super strong. In China, you still have QFIN, which was QFIN, was leading well before the stimulus talk.
Yep.
It now has held its gain. GDS is holding its gain.
And let me pause you on that because QFIN, that's another great example of that tight price action on no volume. If you look at the right against the 21 EMA, that's back in mid-September. If anybody wants another example of that, I mean, that's amazing. After that gap, move up, classic pullback to the 21 EMA, super tight, and then it just explodes out when all the other China news comes into play. Sorry to cut you off there.
No, that's you're exactly talking about the type of things that we want to see.
Yep.
But the transports made an all-time new high, kind of validating Dow theory. Not that Dow theory is so important anymore because most commerce is over the internet. You can't measure that with a truck or a train or whatever. But it's kind of like icing on the cake. It really gives you more confidence. The VIX is digesting down, but it's still very high for a non-crisis moment. But $6.4 trillion in money market. Forget the absolute number. The relative number it's off the rails. How much fuel there is. There's more stocks. The golden goose has really never thrown this many fat pitches at us. It's if I look back in history, I can't remember it. And I am far from a perma bull. In a bear market, I'm all cash, and I will sit. I've sat for a year and a half, 2 years. In the 2000 bear, I almost didn't make a trade for like a year and a half or 2 years. Short term, oh man. Okay, India on fire. Argentina, Millet. Look at GGL, ARGT, GGL, whatever that name is, the YPF oil.
GGAL, that's what you were talking about, right?
Yes,
Gigal, yeah,
that's the bank.
yep.
These stocks are saying that economic reforms we got a little Spanish speaking Ronald Reagan running around down there just shredding all these useless bureaucracies, government waste. What are these Latin American dictators going to do if there's an economic miracle in Argentina? Those guys are on notice. And what if that sweeps? I mean, I know this is long term and it's grandiose, but what if it sweeps the world? What if the world goes, wow, European style socialism is impoverishing people. And in Argentina, they're gentrifying the poor. Now you're a bad guy if you're a socialist. I think what's happening there and what's happening in India, the reshoring, Apple moving there. What is it? INDY acts great. Make my trip, MMYT.
Hmm.
Those all look great. Uh, Hold on, let's see what else. Okay, how about the small caps coming on? And
Yep.
it's really choppy, and I don't like the choppiness, like not the last 3 weeks, but the prior couple months. But it is holding well over 2100 on the Russell. Um, that is threatening to engage. That's a shift and a broadening. So maybe the industrials and the material names and the New York listed names are they're very extended like the S&P. Maybe we need the secondary troops to come up to the front and do some fighting for us.
Right.
What is United Airlines doing?
Yep.
It's what, a 6 to 7 week wall of blue. I stared at that last Sunday. Should I put it in the report? Should I not? And then it just comes rocking out. Look, there's so many names like Meta, Apple threatening to come out. What's Clear. The possibilities there. I mean, there's so many possibilities. We're in this really rare moment where you really have to laser focus in on. There's so much merchandise that to get the right names, you really have to dig deep into all of the metrics to find the real true market leaders. This is a rare moment.
And you mentioned Meta, and I want to get your thoughts on Meta a little bit because we had that really nice big base from basically February of this year. It's just 2 weeks now into the uptrend, back to the 21 EMA now. But any thoughts on Meta from both a fundamental perspective too, with their new products, all of that? I don't know how much you've looked into that, but yeah, I'd love to hear kind of your thoughts on that big player because that's almost separate from the AI, but obviously they're very interrelated as well.
I don't think it's separate at all. I think
Yep.
Meta is an AI company. They're one of the largest buyers of NVIDIA GPUs. Um, it's probably the best name in the Mag 7.
Hmm.
Uh, Apple is threatening to come out as well with a hardware refresh. And again, the action in Apple is completely contrary to analyst commentary. Analysts are reducing estimates, saying the 16 is not getting the initial purchasing or early orders, and the stock just hanging straight up there. It looks like it's about to come out. The market and analysts, I'm going to go with the market every time. So they're the best of the Mag 7, and it's all AI. It really is.
PLTR. Any thoughts on PLTR?
Yes. Initially, I believe deeply. Again, Alex Karp is a great American. He understands communism, socialism. He's a clear thinker. He's a visionary entrepreneur, and he started from scratch, bucked the trend. It's an amazing, amazing company, but the stock was not acting right until about 3, 4 months ago. The average daily true range was much too volatile for me, although it was liquid and it had a big market cap. It just was too difficult. Now it seems to, well, it was added to the S&P or the whatever.
Yeah.
It may have changed its shareholder base a little bit to get a little more stability, and it is acting much better. It's holding its gains as opposed to giving them all back. Palantir is probably an AI must own. It is one of the only pure AI plays. It is probably, even NVIDIA is not pure. They have video games, automotive. Palantir is strictly AI.
Yeah, PLTR now, if you look at a weekly or just long-term chart, it's right up against those highs. Would you be looking for a base here or a pause, hopefully before, it really tries to push higher and really start that long-term trend?
In general, right now is not the time to be buying. We should have been loading up around the last follow through day. Now the leaders are well known and established. Like Uber came out this week, but
Yep.
Dash had come out 2 months ago. Anything coming out now is really the big institutions know what they want in the bear market because they're fundamentalists mostly. So they're right on the leaders early. The names that are coming out now are the names that the institutions passed on. Um, I don't want to say this, but we need a real digestion in the market. Like August, we had a 16, 17% pullback.
Yep.
It was 20%, 20, it was 3% away from a bear market at 20%, the minimum requirement. Coming out of there is when that was really go time. This year has been a can slim year, a growth stock year. 2023 was 7 stocks. The internals were horrific. So the fat pitch started this year. Back to Palantir, it's just extended. I mean, you can do tiny little ads, 5%, 2% add to your position, but I'm not starting a 20% position off a 2 weeks tight. The
Right.
odds of failure are just way too high.
And, we started kind of bigger scope. We went kind of smaller individual stock position management. Now bring it back to kind of the bigger picture with the rest of this year, 2024. Obviously, we have the election coming up, which could be a big factor. What's kind of your outlook into the end of 2024 and into 2025?
The futures market has 90% probability of November 7th cut, quarter point. We get the uncertainty of the election out of the way, no matter who's elected. Um, it's hard to come up with a scenario where we don't hold or go higher. I mean, we're in a rip roaring bull market here. Now, I initially had thought we would get some when the futures market was deadlocked like 50-50 or Trump underdog a little bit, there was a ton of uncertainty who was going to be elected. So I thought the market would go dormant. And now all of a sudden we looks like we have some certainty and the market's running. So before I was kind of thinking post-election run, relief, but now we've been running as the last week or two as we have more of a clear leader. Now,
Mhm.
again, it is still the futures market is measuring a win by one vote. It's a win. It's not a landslide. So there is still uncertainty. It's not a lock, but I think we're in bull mode. I mean, I'm a trend follower. We have an economy that is subtly decelerating, but very healthy. A Fed cutting rates into an economic boom, innovation revolution. This is a cocktail that is powerful, really, really powerful. I don't think I've ever seen in my 40 years a cocktail this potent ever. If you're not max long now, you shouldn't. You're not a stock market. You don't understand what's going on. Again, it could roll over,
Mhm.
but it's not. And
And
I would come
oh,
on
go
and
ahead.
get bullish, and then we get slammed, and people mock me like crazy on Twitter, and then the market makes a new high a week later. Like they're right for 20 minutes.
Yep.
I've been right for a long time.
There you go. And I want to ask kind of my usual question, advice for traders watching this, um, specifically for people who have good positions in stocks that could be, that have been trending well, good leaders. And I asked this before, advice to sit, but I guess how can they make the most out of the opportunities that they have currently in their portfolio that they want to hold and get the most out of? What advice for people who want to hold for the big move?
Big years in the market frequently lead to horrible action in the leaders in the last 2, 3 days of the year between Christmas and New Year's. And those are hedge funds locking in their bonuses, slamming these stocks. It's a phenomenon that started about 10 years ago and it's on and off, but in big years, they have these giant gains. There's also a phenomena where in the first day or two of a new year after a big year, people don't want to pay the taxes in 3 months. They want to wait 15 months. So they'll get slammed in the first couple days. The bigger the year preceding, the more likely and deeper. I mean, in 2000, I think the Nasdaq fell 7% on the January 2nd. So be prepared for that. And I'm going to be just fine with a lot of heavy hedges. And if they go up, I'm cool. I don't want to get shaken out. Don't get shaken out of a stock that's about to change your life. And think about history and what mega trends do to certain names and what you might be holding. And is that one of those potential names because you know your fundamentals? Get your position size down. I want you to be there. And if you have too big of size will kill you. Get those positions down to where you can live with them and get your leverage down. These are all things that you learn through time. You're going to have to, I had to screw a lot up and I still screw up a lot, but I don't screw it up like I used to. I'm trying to answer your question.
No, that's good so far.
And when I look back from when I was a cold call stock jockey, a billion years ago, the names that I saw come up in Investors Daily, like the full page, thing, it's just another golden goose egg, another golden goose egg. These fat pitches are never going to stop unless we get suffocated by socialism. There's going to be more Blackberries, Rims, Starbucks, all these names we're talking about.
Yeah.
Americans want to level up. They see the skyscrapers and the Rolls Royces and people like, I want a piece of that pie. And the innovation is never going to stop unless we disincentivize it. And I don't want to tip my hand too much, but Trump is a protectionist, and whether we get Kamala, she's going to bash the pharmaceuticals. These are nationalists, protectionists, so they're going to attack innovation. I'm worried both of them are. So you have to be ready for these shakes, but those are probably just moments. Don't get shaken out of your names. I think that's what I'm trying to say.
Yeah. And the big trends that we've talked about, especially AI, who's the next president isn't really going to impact that in the long term. It's too big of a theme. It's too big of a movement. So, like you said, there's going to be so many fat pitches coming in the coming innings of how that plays out. So, I think that's perfect to remember. Jim, did you have another thought here? It looks like you've got
We've
one
had
more. Yeah.
50 some elections. You think every one of those 50 elected presidents was a genius? We've had some idiots in the White House. Okay. We survived. We have the greatest rule of law. We are by far the greatest country in the world. America is a one-way street. Immigrants are coming here. I called the Census Bureau. 4,000 people forsake their U.S. citizenship. We had millions coming in, 2 million or 5 million legally, and then who knows how many. They're coming here for a reason. People are not dumb. Okay, they're not going to Russia. They're not going to Africa. They're coming here. And it's really a shame because we're stealing the seeds of brightness and greatness and innovation from these poor countries. America is just getting stronger. So I don't see any let up in this. Now, the Fed could overcook it, but it's bull city right now.
Jim, I always enjoyed speaking with you. You hit a few more bingo card slots there, which is that last sentence. So thank you for that. And by the way, this is the first interview I'm doing with 100K plaque up there.
Congratulations.
Thank you. You were one of the very first interviews that I did, which was always great. I always learn something more from you. So thank you for that. Where can people learn more from you if they want to reach out? Get more information on what you're saying. Where can you point people to?
Okay, so every Sunday night I put out a report that it has as many as 100 charts in it. I give you a complete review of all the leaders, all the indexes, everything, all the commentary that you would need to implement CanSlim every Wednesday. And this is at roppelreport.com, 2 weeks free. Then every Wednesday I take every subscriber's questions. And if I have to sit there for an hour and a half and answer them all, I do. So if you want to learn how to implement CanSlim, you want to see my battle plan every single week delivered out Sunday night, go to Roppel Report CanSlim, the roppelreport.com.
Perfect. Well, Jim, thanks again for your time. Any last thoughts, any last closing bits of wisdom that you can provide anybody with?
first of all, you got that YouTube award for a reason. You have done great work. I think my most widely viewed interview you did. There's a reason. You're excellent at it. And after that, the golden goose of capitalism is going to keep spinning all these monsters unless it's suffocated by socialism. It's really that simple. Thanks for interviewing me. I had a great time.
Yeah, cheers, Jim. To everybody watching, thank you guys all for sticking with us. And yeah, thanks so much. Check out the links down below to connect with Jim, and we'll see you guys in the next video. Cheers.